Hi everyone, we on? Good, we are. Okay, I should say before we start that nothing said on this panel constitutes investment advice. That was a terrible post-lunch joke, but we'll let that go. Okay, hi everyone. So bricks, pensions and cash, that's pretty much been the British take on investing for decades. Fintech's done a lot to unpick that and to improve access and understanding for the better. So today, we're asking how that access through technology turns into real long-term wealth creation. I'm delighted to be joined by Dan, Rajesh, Michelle, Lesley and James, who are going to explore this in this session. So panel, there are two main themes emerging. The first one, I think, is the UK's legacy attitude to money and the challenges of financial literacy. Then there's the access component, to the advice, to the instruments and to the markets. Financial literacy, I'm sure you don't need reminding, is persistently low in the country. So half of adults lack confidence in managing money, and only 31% of Britons invest in stocks compared to around 60% in the US. Over the past decade, fintech has started to change that. So Rajesh, if I can turn to you first, thank you. Financial literacy, you've seen this from a policy and an entrepreneurial perspective in your career. What else needs to change at a system level to drive better understanding and therefore broaden participation in wealth creation?
Thank you very much. What a pleasure to be here amongst all of you. I think we need a huge fundamental change. I mean, what we have seen in the last few years, the technology has improved, the access has improved, the tech has improved, the adaptability has increased significantly, particularly during COVID times. We saw digital adoption increase substantially. But what we haven't seen is sort of investing becoming an everyday thing. Like you said, Nick, the number of people in the UK who invest is less than half of number of people who actually invest in the US. So the financial literacy is one side of the story, and we need to improve that, increase that. But that alone will not be sufficient. We need to change the whole culture. It's a bit like, and today perhaps with the tube strike is not the greatest day of talking about it, but if we wanted people to cycle more in London, what would we need? We'll need cycle lanes. We need to make it safer for people to cycle. We need to make it easier for them to buy cycles. We need the traffic signs, road markings properly. We need the rules in order. And that's when. So you need to create the environment in which people feel comfortable and confident to happen. So a behavioral change is required. I mean, one of the great examples in sort of financial context was around auto enrollment of for pensions, and that was a game changer in the UK. And that is the level of shift that we'll need. We need something equivalent of that in investment, so that we are incentivizing investments. We are creating an environment where people are investing, and of course the financial literacy itself need to start from very early on, from the school, universities. Money is part of our life, and it's very important that we talk about it from it's an important life skill. So that needs to be, but fundamentally what is required is a big cultural shift, and we need to build the system so that it adapts to people rather than trying to get people adopt and cultural change. So we need to build the system so that it's easier and safer, and people feel more confident and real sort of investing, not just having a platform. There are plenty of platforms around, technologies there, but that mind shift change needs to happen.
So turning to the education and guidance part, Dan, at Robinhood, you've been very focused on this sort of lowering the barriers to entry, both through the platform itself and through the education component. What have you learned about what actually gives first-time investors the confidence to start and sort of possibly more importantly, stay invested?
I think it's about clearing up some myths. That's what we found is really important in maintaining that relationship. So one of the best bits of research that we've done is on access and how people find what do you need to get started investing. People thought that they needed, on average in this survey, around £2,500 to open an ISA. Well, with Robinhood, it's £1. So there's this myth that investing is for the wealthy. It's a reward for being wealthy, as opposed to a tool to get there. I think talking about risk properly is really important. And once we talk about risk in a very holistic sense, as it applies to investing, people tend to warm to it and be less scared of it, especially whenever we put up some figures around what inflation could do to your money. We found there was a big drop. It was in one of our research modules, 17% drop in people who were more willing to invest just because they were now presented with both sides of the coin as opposed to capital at risk. What else have we got? So framing that long-term picture as well and putting that in a way that talks to an initial investor and says, it's okay that you're learning. You don't need to be an expert to start. There's a very vulnerable position that we put people in when they start. We say that come from cash into investing, by the way, you must know all of these Greek terms, and you must know Latin, and you have to know what valuations and PE ratios are.
So if you're a curious, say, cash investor, how do you get them over that hurdle?
I think it's about addressing behavior. You can always address kind of the knowledge element, and that's what we do. One of the good features that I like at Robinhood is Robinhood Digests. It breaks down kind of things like earnings calls and market movements kind of in near real time and in jargon-free language. So that addresses your knowledge element. But the behavioral element comes with the education and talking people through case studies, real-life investment examples, long-term features. I liken it to an art class. You know, you can chuck all the resources and the paint and the easel at someone and say, go paint me a masterpiece. Or you can sit beside them, show them what mistakes look like, how to correct that, what good looks like, and how to get there. That's what we're trying to do.
It's a helpful analogy, thank you. Lesley, you're focused on behavior and possibly a little less than on activation, but correct me if I'm wrong on that. What actually, in your experience, moves someone from having access to then taking some action and taking that first step?
Yeah, how I see this is that when you talk about access, I see it as that you're opening the door. But action is how you invite people to the party. There's a missing layer here, exactly is the behavioral side. And that when it comes to behavior, I actually think you have to address it in two-sided approach. So one-sided is the investor itself. I see that in 3 steps. First of all, the investors need to start having a self-awareness. Who am I? What kind of investor am I? Secondly, behavioral pattern. What kind of behaviors are pulling me back? When you know that, it's very powerful. And when you know that, then comes the third. It's about the path forward. Meet you where you are and have an actionable plan, a path to get you started. And what is missing at the moment from what I observe, Dan, please jump in when you have some thoughts. On the institutional side, it has to mirror that 3-step. When it comes to investor have the self-awareness, distributors need to have the understanding. When you have this behavioral pattern observation, distributors need to know deeply inside what kind of behavioral pattern needs the appropriate behavioral nudges to help them and meet them in the middle. And this is where I think the true activation can happen. There is something, I mean, when it comes to personalization, a lot of that we're talking about digital personalization. That is not enough. The next game up, I call it psychological personalization. This is when you deeply understand people's fears. There's a lot of that psychological. It is about emotions. Understand that. I mean, we can talk about that later. We have some case studies. We work with a Dutch broker. In fact, surprisingly, they have 1 in 5 users are women. Only 20% users are women. So we were brought in to understand why is that, right? Give you a very, very, example. Love to hear what you say in Robinhood. Women tend to be, for example, perfectionists. It's really not about lacking capability. It's just that we want to be confident before we start. Understanding that really gives a very interesting insight, and you be able to nudge it, and then the result really changes from that, and activation happens from that.
Thank you. And picking up on Michelle, if I can turn to you for the next question about data and AI and the impact that's having on consumer behavior.
I'm a co-founder of a Fintech. It's in the financial sector, there's a lot of customer data. What we do is we use AI to understand the customer's bank transaction data, and we developed a very cool technology which understands the customer's affordability, so it helps us and other lenders to make a better decision if we should lend money to customers or not. We have seen, it was very powerful actually, because in the traditional financial service or the lending world, banks use credit score to make a decision. Credit score is a Stone Age technology. It's right on average, but wrong every single person. What we have done is basically we look at customers' bank transaction data, and there's so much data. And when the data is there, AI just becomes a very natural option because you use that one to understand the pattern, extract the signals from the noise. So we have been using AI from the very, very beginning. Started the business 6 years ago at the beginning of COVID. Before that, I was studying in AI. 20 years ago, I got my PhD in AI. And since then, I spent a decade in financial service. Financial service is actually really good because we have so much data. And when the data is rich, AI can be very, very powerful. So, and the question is that how do we actually create value for the customers as well as value for the company? If you take the product that we have, and as an example, we use AI and the bank transaction data to understand the customer's affordability. That enables us to give a better product, a cheaper cost, a loan to the customers. And actually, because the technology is so powerful, our credit loss is so much better than our competitors. Our default rate is 70% lower than our competitors. That's all enabled by the technology we have. And as a result, it's good for the company, and then we can pass can pass that kind of benefit to the customer, give them a lower loan as well. So it's actually a very, very positive loop we have created. And the reason why we can create this kind of positive loop is the underlying of it is basically data and analytics and AI.
Thank you. James, your firm is well versed and established and has been successful at connecting investors directly with a number of, I'm going to call it TradFi, but please correct me if you feel no differently. I think they are. I'm from the old world of finance, unfortunately, as well as the new. Equities, bonds, and private market opportunities. You're a provider, but how do you balance providing access to investors with the education piece so they can make informed decisions?
Thanks, Dave. Great question. So we're a platform that our slogan is, powering inclusive capital markets, giving individual investors, self-directing individuals, access to public company fundraising. So whenever an IPO takes place, we tend to be there running a public offer. We've done every major transaction in the UK for the last 6 years or so. And that includes every FTSE 100 and FTSE 250 company that's raising capital. And the point is, if they're raising that capital from the largest institutions, sometimes at a big discount, we should be able to give, for democracy purposes, broader access to everybody. Because actually what companies today understand is a happy share price comes from having the right distribution and ownership of your company, as well as ticking that box of governance, of giving equal and fair access. To your point around education, and indeed the guardrails that Rajesh referred to as reference, with cycle lanes, we take this very, very seriously because, as we start to see regulatory changes that took place in January have removed limitations on how much, a retail or public audience can get involved in a transaction. And so it's really important to make sure that there is consideration on how, a placing of shares is allocated in appropriate form with the right data. So we are very focused on the data that we create and receive from our distribution partners. And then from an education point of view, it's really interesting because, as we've just heard, educating an investor on what is an IPO, what is an ISA, is a simple but not so simple agenda. And we've all got a duty of care to bring that to the surface, especially given the need to create a nation of investors in the UK, because we're such a far place from where we used to be in the 1950s, let alone the 1980s and so on. So we've got very good history of being a nation of investors. But to the question, we take it, we relish the opportunity to provide that material that helps the individual make an informed decision, because the reality is actually individuals buying and selling on their own account have proven to be more long-term thinking and somewhat more informed than many of the institutions today. So we're at a very exciting point in time, and that comes back to the availability of information in a digital form.
Thank you. So taking it up a little bit now to brand UK level, if I may. We're doing quite well. What does the UK as a place to grow and scale a business or a fintech business need to do to maintain momentum in terms of financial literacy and access? What more can we do as a sector and an industry?
There's a huge amount of things. Where do I start? I still remember when I became deputy mayor in 2016, the number of tech unicorns in London were about in single digit, maybe less than 10. And by the time I finished 8 years later, they were over 100. So we have seen a huge, so first of all, first thing to say is London and the UK is doing absolutely amazing. In fintech and generally in sort of tech businesses, we have taken a huge leap, and we should not sort of talk ourselves down on that. But equally, there's a big opportunity for us to take things to the next level. And there is a challenge because we do see occasionally a company moving out of the UK because of lack of friendly rules around sort of capital listing, for example. So we need to strengthen the hand of London Stock Exchange and make our capital markets more attractive. We need to incentivize entrepreneurs in so many different ways rather than sort of penalizing them from a tax perspective, and it needs to be made, UK needs to be made more attractive place to grow the business. And we need more patient capital. I mean, of course, we've got more VCs now than we ever did, but still the risk profile and the amount of risk they're willing to take is not quite, I mean, I'm doing a lot of work in some of the other sectors, like space, and you see companies, Brits actually moving to America and starting businesses there, and that is unacceptable. In fintech, I think we are in a very good place, but now the companies which are getting to the next level in terms of capital markets, I think that's where we need to see a big set of reform and cultural shift and big support from the government.
I would go from the other side as well, from the customer side. Something Lesley touched on is know your customer back to front. There's no point creating things because it's good for London fintech if it's not serving that end customer. In investment circles, our customers have goals. And as much as the company is there, it's a tool for them to achieve that long-term goals. My dad likes to remind me that London is full of these tools. But I think the point there is that, something we find in our community events is we regularly talk to our customers. What do you want from us? What do you need from us? And what will maintain that relationship with us whilst we educate you in return?
As a fintech, I see actually both sides. On one side, the fundamental ecosystem we need to have is the open banking for our business. Currently, the UK is probably the leading country in the world in terms of the maturity of the open banking. So we actually benefit a lot by doing the business in the UK. On another side, if I just talk about it from the business perspective, currently we are actually pretty decent size, like 150 people at the moment, and profitable. I was actually visiting Howard, the deputy mayor of London, was here just before the panel. I was actually visiting a couple of cities in China with him. I did a couple of trade missions with Grow London colleagues last year, in different countries. When I go to some countries, they are very proactive, and some of the incentives they provide to encourage us to set up office in those countries are actually really appealing, and I have not heard of that in London. So for example, some of the cities I went to, they said, okay, come here to set up an office. I give you a cap of the income tax for the people you hire here. Come here, we invest, we basically match your investment to a certain point. That could be actually very appealing, particularly for startup, because startup is always short of something, and then sometimes it's short of funding. And then in particularly very, very early, we passed that stage, but in particularly when we are very early, hiring people was very, very challenging because we didn't have funding. And then we need to go there to hire people. We need to attract really good talents to build the business, but we cannot offer, a very sexy package. And then if, let's say, we can get the support from the government to subsidize that, or they can actually get a different tax treatment from the income tax perspective. So it's actually very encouraging for people to actually join that kind of industry. I also approached by some other countries, like for example, Canada, for example, some cities in the US. They do provide a lot of incentives, and some of the incentives are actually doesn't exist in this country.
So creating an investment culture in the UK, James, any thoughts on anything more the UK or UK PLC can do to encourage an investor's culture?
I'm going to shine a bit of light on the points that Rajesh was making, because he's right. We need to improve the culture, and we need to see evidence of London being as relevant as it can and always has been. The good news from where I sit is, we get mandated more on deals by lawyers and advisors than any other counterparty. So I've got a very good picture of what every major law firm has on their books. And the good news is, because of regulatory changes and listing rule changes that took place from last summer all the way through to January of this year, actually best advice from the bank or the company or the lawyer that's advising a company is careful what you wish for, because New York doesn't work for the size of your business and profile of your business, and London really does. And there's a long list of 20 plus reasons why that is the case. So when we look at what's happened in terms of companies mandating legal counsel for a UK listing, it's coming. And I think that's really important, because if we see a business like Monzo, and I mention Monzo because they've been winning awards as the most trusted brand in the UK. So if they were to write to their customers and say, we'd love to bring you on this journey, thank you for being our customer, would you like to be a shareholder? Well, they've got to go and open an account with an interactive investor or Hargreaves Lansdown. The shares may just go up. And at that point, they're thinking, that was easy, what else can I buy? And that's where I think they will have a listening ear for what's available in terms of information and advice, not buying single stocks, but buying products that are appropriate for the purpose of savings through platforms and so on. And a little example of that is, as a business, we've been placing government treasury bills in the hands of the public for the last year or so. We're only placing 100 and something million a month, but that's quite a good number for an instrument that until fairly recently, the man or lady on the street had no idea what a treasury bill was. And so back to the educational point, you're explaining this is a government instrument, at 4-point-something%. It's a risk-free rate. That's a very good benchmark to help the individual understand how they can then invest for greater returns than that with an appropriate level of risk. So there's a lot going on, and I just think it needs to surface, but I'm highly optimistic it will do as we push through this year. And all the hard work of regulatory changes starts to unfold and show itself.
I was going to put a word out for the Pay It Forward campaign, which is a city campaign to provide education to school children and around financial literacy, which is being driven through teachers and starting in London. City AM has been behind it for some time. It's a really, really great thing. So if there's any big checkbooks in the audience, want to write a check to support that campaign, it's thoroughly well defined and has some great outcomes for financial literacy in the city, and hopefully will be spanning out nationwide eventually. We're pretty much done on time. Thank you very much to the panel for sharing your thoughts, and for everyone for their attention. Much appreciated. Have a great rest of your conference.